Hello, Maverick Traders. Welcome out to your currency recap for August 12th. Corey here with you. So we're going to take a look at meaningful news in the markets. We're going to look at how money is rotating and then highlight our very best ideas in the currency markets, be that a currency pair or a crypto trade.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today was kind of interesting in that equities really didn't move much, but there is some drivers of volatility upcoming, and perhaps we're not done with it just quite yet. So kind of a quiet start to the week, but we know we've got CPI out on Wednesday. Equities eke out a small gain overall, but if you dig below the surface, there were actually more stocks falling than rising, and oil continues to push higher. The commodity trade was really the story of the day. It was the strongest market today. So Japanese yen continues to pull back, and of course we know that it was that huge spike higher in the yen that was a big driver of volatility in equities, in broader markets, and it was a big driver of really the yen carry trade, and the unwind of that was the big driver of why things got volatile last week. However, I'm going to prove to you today that the volatility spike was not as big and not as historic as most market participants believe. I did a little investigative work that I think you'll find interesting. Still a risk-on environment in the short term, Aussie and Kiwi to the upside, and that's where the velocity is right now. So if you followed the futures last night, futures came in quiet on Sunday evening. Crypto was down, so crypto made a nice reversal. Crypto was down about 3% last night, finished up about 3%, so it was a big, nice reversal. Gold and oil, again, oil the standout of the day. Really strong move in commodities. Now, Bitcoin up 2.5%, Bitcoin Cash flat, Ethereum up almost 5%, Litecoin up 2.3%. But what's interesting is even with this reversal in Bitcoin, it's still the laggard. It's still the underperformer. So we'll look at that within the charts. Now, we're still in a bearish market. We're below the 20, below the 50. The slope is starting to roll over. If we take a closer look at this chart, you can see the bearish crossover, that 20 crossing below the 50. We know that that's a bearish indication. And here's my take on this. It's very much what I laid out. This was a Monday because I can remember doing this same update. And I said, watch for the markets to have a sell-off day, but then a recovery. And that bounce in the recovery will be the best short. It's the exact same playbook here. Watch for tomorrow probably to be a day where they try to hit the market, and it'll just be short-lived, probably a one-day sell-off a la back here, and then we'll push a little bit higher for another day or two up into this gap zone, into those moving averages, and from there we'll probably push offward. So I do think we're going lower, but I think it's after a little more upside. I think the risk on trade for a few more days this week is intact. Then the bear market reemerges. And the reason for that really is psychological as much as anything else. The bulls have control. The bears, they're frustrated with this rally. That has to reach its tipping point. The bears have to be overwhelmed and exit their trades and get pushed off the markets, and then we can resume to the downside. So the rest of this week, we've got PPI data out tomorrow. We've got CPI data on Wednesday, and this is the one that markets are watching closely. 0.2 is probably a perfect number for equities. If it comes in low, say 0.1 or less, people start questioning whether the Fed's going to cut at all. Maybe they only cut by 25 basis points instead of 50. If it comes in hot, same thing. They may not cut at all. If it's too high, then that's the same problem as well. So it's one of those things where there's kind of a Goldilocks. You want it to come in showing a little bit of inflation, but not too much. That's the idea. Otherwise, market participants start worrying about whether the Fed will cut and by how much and so forth. Now, retail sales out on Friday. The consumer is a driver of the economy here in the US. That's always something to watch closely. Let's look at some currency and crypto analysis here. So if we look at a velocity, our velocity philosophy is one of where are you at in terms of your short-term moving average and the RSIs and momentum and so forth. There's not a lot moving, but what has been moving has still been the defensive areas a little weaker. Bitcoin, US dollar, Japanese yen on the weaker side, Kiwi and Aussie on the stronger end of the spectrum. I don't see that. Again, I think tomorrow that might reverse temporarily for like a day or so, maybe 2 days, but then another burst coming. So what I'd expect to see is basically the Japanese yen chart and the Kiwi and the Aussie having a little attempt at reversal that fails quickly, and then some trading opportunities. But before we get into that, let me show you something that's pretty cool about the VIX. The VIX supposedly spiked into the 60s last week. Now that spike up in the 60s really doesn't make sense given equities weren't cascading lower. There wasn't widespread, what they call blood in the streets and everybody just collapsing. The only other time we've spiked up to those numbers in the last 20 some odd years were 2020, COVID. And what do we know about what was happening there? Well, equities were just cascading lower. Disneyland was shut down. The entertainment world was shut down. Stocks were down 30% in a straight line. The only other time before that was 2008. Lehman Brothers, Bear Stearns collapsed. Equities were cascading lower, down, 30, 40% off the highs. Was this spike anything close to those? Absolutely not. Equities were down a couple of percent. Stocks were still up for the year. Stocks were only back to where they were in April. I mean, give me a break. It was not that way. And guess what? It really never happened. This volatility that everyone keeps pointing at, saying, well, it went all the way to 60. That's historic. Well, not really. What truly happened was the VIX spot price was more in this range. And in essence, we can prove it. One, if you go to the intraday chart, it shows a peak of 56. And two, this is just the spot price. But if you look at all the underlying instruments and where they traded, such as the futures contracts, you'll see it. So here is the August futures for the VIX. The high was 36 and change. This is what people are actually trading, not the spot price, but the actual instrument that tracks volatility. This accounts for the futures trade overnight. So actually it's a better reading. It's a better gauge because the VIX spot price only shows during market hours. Well, this shows the entire overnight session, and we just never had a VIX there. The August futures traded up in the 30s. The September futures traded up to 35. The October futures traded to 34.20. Make a long story short, the volatility last week, 1 week ago, and everybody looks at the VIX and goes, oh, it went all the way to 60. It's just not reality. Where the VIX actually traded was in the mid 30s. That's the truth. That's the reality. So what does that mean for us? Well, one, it means when you spike into the mid 30s, look, that's happened dozens of times in the last years. It's big. It's something that shows there's real fear in the markets. It shows that markets have sold off, but it's not historic. This was not a 2008, a 2020 type of environment. And that makes a whole lot more sense. So I hope that's helpful in terms of putting some true context around what last week was and what it actually means. Now, was it a short-term bottom for equities and kind of an exhaustion? type of scenario? Yes, and we've seen the volatility back off and we've seen equities rebound, and that's what tends to happen. But I just want this to be put in proper context so you understand. Again, you're going to continue to hear on financial news networks that the VIX had this historic run and oh, it was so big and so amazing and powerful. It's not exactly that. That's not really based on reality. So what does that mean for us? Well, here's the Japanese yen, and this is last Monday. Again, kind of correlated with the VIX a little bit because it was driving some of that volatility. In fact, the run higher in the Japanese yen was more historic, and this yen carry trade and this blow up. Look, there may be some hedge funds that blew up from this because it's so heavily leveraged. There was some volatility, but this was, I even said this on Monday, the VIX reading just is out of pocket. It's out of place. It doesn't make any sense. And now we understand it really never happened. But what does this mean? Well, the yen carry unwind doesn't have to be over. In the short term, I'd expect the yen to try to bounce and then that to fail and pull back a little bit further, and then that's your buying opportunity. Basically, it's the counter opposite to what I'm expecting out of equities. I expect a little attempt at bounce, and then that one shakes out a little bit further, and that's the final push. So if my Japanese yen chart comes down into this area and gives me a setup, kind of does the fake out higher and one more push. If you like Elliott wave, call it an ABC style correction, if you will. The idea there, if we get the yen down at these levels, that's where I'm going to flip. That's where I'm going to get a little bit more risk off in my trading and my expectation. So equities, exhaustion low in equities, exhaustion high was set in the yen, but it's not that historic type of move. Play that relative strength, relative weakness game for a little bit further, for just a little longer. Kiwi and Aussie to the upside, Bitcoin, US dollar, and Japanese yen to the downside. After a little further push to the downside in these, I think this reverses. I think this flip-flops. We're probably a few days early on that. So we'll be looking for that. Watch for the yen to try to bounce, then fail and sell off a little further, push us down into that pocket a few days from now, and then I'd reverse this and start to look at yen for an upside trade. Hope you enjoyed the currency recap and learned some new things today. Have a great week, everyone. We'll see you next time.